Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin. Well, you know the drill by now. It's a continued volatile week on Wall Street. So we'll talk about the volatility, the reaction to more coronavirus headlines, and just what to do in a market like this. And there's a lot of movers, obviously, so we'll cover as many of the big ones as we can. Some earnings related, some just broader market volatility related. So we'll just try to cover as many stocks as we can on the show today. Our guest is, you're going to like this one, Gordon Johnson. He is the founder of GLJ Research, Tesla Bear, Aurora Cannabis Bear, solar expert. We'll talk to Gordon at 8:35, so looking forward to that. And then Joel, give us a recap of what happened overnight.
Nothing good there, Mr. Israel. Are we getting the YouTube feed up here? I'm having a. You are?
Yeah.
Let me hit a refresh here. S&P futures are trading down 39 handles at 3071.50. We got a little pop during the speech last night at 6:30. That pop took us to 3117. The only thing about that, it was Tuesday's low, but at 17.25, you had to be really quick. Pre-market low 30.59.50. That takes us back to some November levels. The next major level I have on the downside is 30.35.75 and then 30.23. That is your November 1st and October 31st low. On the upside, if we could get over 30.88, that's mid-range on the session, we got a chance to rally. Crude, just going with the rest of the market, down $1.38 at 47.35. You have gold acting like it should now, up $10.40 at 16.53.5. Silver back up over 18, up 17.6 cents at 18.09. And we talked about Bitcoin, and man, it hasn't rallied in a safe haven market what it's supposed to be. Yep. It's down $45 at 8,840.
I guess Bitcoin really is truly uncorrelated to everything. Or I guess you can get correlated because it's going down, but
it's highly correlated to nothing.
Right. Yeah, exactly. And then one thing I wanted to say just about just the market volatility, and for everyone, and I'm certainly guilty of this myself, everyone who's said in the past several years, I'm waiting for a major flush and then I'll come in, and I'm waiting for a major dip and I'll come in. Well, this has been the worst week in literally years. And where are we? We're just back to where we were in November, right? So
that's a good perspective on things,
right? Just dollar for long-term investing, just dollar cost average your way in, going up, going down, going sideways, doesn't really matter. This has been a horrendous, painful week, and yet we were here 3 months ago. So just some context.
Can you pull up though a monthly chart for a second?
Sure.
Monthly chart of the Dow or the S&Ps or
here we go.
SPY. How far back what one are you showing here? It's not
this goes to 2000.
Okay, it goes to 2000. And what do you have? The S&Ps or the Dow?
Yep. Yeah, this is the SPY.
Okay. You got to look at similar, periods of when the market is turned, right? And who knows? We could just turn around and go right back up to an all-time high. But if you look at, after 9/11, it took over a year for the market to recover, right? A lot of big red candles. And then during the financial crisis, from the time that we peaked to the time that we bottomed, it was at least a year, correct?
It was a couple of years, yeah.
Yeah. And then you had this move off the 2009 low, and there's some big red candles in there along the way. But if you think about where the market is at, okay, and the potential for it to go down is much, much greater than for the market to turn around and rip to 4,000. So you have to look at things in a historical perspective. We're in the early innings of this thing. We know China's been shut down for a long time. We know that impacts a lot of U.S. companies. We don't know the extent of the impact on the United States. There's a lot of unknowns. And what
Exactly.
market does not like unknowns.
Right, and now you have Goldman Sachs saying this morning that, and this is pretty wild. There may not be any earnings growth in the U.S. this year if the coronavirus gets bad to a point. I'm not sure how. I mean, that's just a prediction. They have no way of knowing that, and I'm not sure how they can. To something that Brent said on our news desk, how can they lump every U.S. company in together and say there won't be any earnings growth across the board this year? It seems like a pretty out there prediction to make, but these are the kind of things that happen that get said when we just don't know.
Well, here's the thing too, though, and this is just like the mentality of the investment world. What if there's negative growth? What if they don't grow? What if earnings are below expectations?
Right.
Everyone wants grow, better, more. Okay, so they're not going to grow. So are they going to be flat? Are they going to be negative? I mean, there's a lot of different factors that go in, and we're really a really spoiled society with what we've had with this market since the financial crisis. And things aren't always better. Things don't always improve. Just every day doesn't get better. Just from a big macro standpoint, let's contain this virus. Let's find a cure. Let's find a vaccine. And then once we get to that point, then we can evaluate the damage that we had. But like, who's booking a cruise? I mean, well, I didn't like cruises before, so I'm not booking a
cruise. Actually, my mom just booked a trip to Greece for like next year.
Well, next year is not too bad.
I don't know why she did that.
Probably because it was like really cheap.
I just told her to buy insurance, please.
I buy it. Oh, that's another thing. Every single trip that we have some booked over the next year, man. Insurance. You gotta have insurance.
So, but Brett, Joel, to your point about we can the risk up here is high when we've been spoiled for as long as we have, and that's a great point because the last decade has been pretty great, generally speaking, for the economy and for the market, which aren't always the same thing, but with a couple of exceptions, it was an amazing decade. And just to give you an idea of how spoiled we are, what was the biggest news from after the bell yesterday? It was Microsoft warning. They said that they're not going to meet their expectations for the quarter on their personal computing segment. So they're warning about one segment of their company. And Microsoft was down with 3%. I hadn't checked it actually. I don't know how far it's actually down from the close, but you can see Microsoft down in the pre-market. They warned about one segment of their business, and that is the lead. That was the biggest headline of the after-hours session.
So when you mentioned Greece, someone said she's welcome here. So I don't. Did we have a listener from Greece here?
Maybe.
Yeah. I don't know. I'm trying to find it in the chat. If you are, it's dark. I can't even pronounce the name, but if you're from Greece, just give us a thumbs up here. We like to welcome.
I'm taking recommendations, I guess. I'll pass them along.
She's welcome there.
But going back to Microsoft here. So Microsoft warned yesterday. It's the biggest story of the after-hours session. It's the biggest stock-specific story of the after-hours session, and they warned about one segment for one quarter. One segment for one quarter. So like that's where we are. We don't. It's hard to remember how bad it was. There was a legitimate economic contraction after the dot-com bubble. There was an economic crash in 2008, 2009, and we just haven't had that for so long. I think a lot of perspectives are skewed by the fact that we had two recessions within the same decade, and now we've gone another decade and basically saw economic growth the entire time. So I don't know where I was going with that, but
No, I think you're just kind of going with what I was saying. But
yeah,
let's talk about Mr. Softy here.
sure.
Down 696, down $7. It's called at 163.17, 163.20. I mean, it's hard to say, where to buy this thing. I mean, once again, Spencer, you probably has to be showing a lot of weekly charts
Sure.
because when you get into these kind of time frames, really, what else can you look at? Because you're going back to historical patterns here. I don't know if this is going to prompt any downgrades. I got it. I know they just said one segment. Maybe they, wanted to soften the blow. Maybe they have, they're going to wait and warn about other segments. But right now, we're looking at the pre-market chart, the 15-minute chart. They're just selling and they don't care. There's just been a step down seller here since 6 a.m. Who knows? That person might be long like 1 million shares from $98. You don't know what people's cost bases are selling, and you don't know if they're trying to get short. But haven't had a big red candle like this for a while. And Mr. Softy, maybe hold out for 160. Keep an eye on the pre-market low. I see 163.07. That was your low on January 28th. And then I see the next daily low at 160.20. So if you really feel like you have to own this, you could maybe put some bids in between 160 and 163. But 160.20, another $3 from here. We'll see it hits it in today's session. I mean, one thing that kind of supports a stock like this is anybody that has any of the shorter dated options. If you had the see, we're down $8. If you had the 166 puts that expire tomorrow and you're scratching your head and you're saying, oh man, I'm not going to make any money on these. Boom, they're worth $3. So either they can cover the put or they can do the trading strategy that Dennis talks about a lot, trading off your position. You could buy, if you're short 10 puts, you could buy 1,000 shares at 63. If it keeps going lower, well, you're out at 66. If it goes higher, you can scalp out of that trade. But that's a strategy that we've talked about a lot on the show. Using your stock, you do need different kind of accounts to do that.
Right.
But
And speaking of that, there was an article in the journal, or there is an article in the journal this morning, just about how options trading has exacerbated the volatility this week, and how people's positioning has just sort of made volatility worse, has made liquidity worse.
why? Why is options trading make it worse?
I
didn't read the article. Why?
Yeah. Okay. If I can quote here from the article, this is from the head of equity derivatives at SocGen, Vincent Cassat. It has been a big contributor to the increase in volatility. He's speaking about options trading. Right?
Why?
We can switch quickly from okay, that's not relevant. Let me scroll down here and see if I can find a quote that actually fits. They talked about this short gamma trading strategy, and
I don't know.
Here.
You know what? I don't want to get super opinionated on that one.
Okay, and then he wrote this. So there was this guy wrote in a note to his clients, in addition to the risk of the virus, significant drivers of price action was selling from systematic strategies and options hedgers. So he's just talking about they're blaming the options market for some of the volatility this week. Maybe they're right. Who can say?
You know what, Spinner? What do you think about that? If you're listening, I know you might be busy here in the pre-market. I don't know to blame the options markets. I think if anything, people can look for. I mean, there might be people getting blown out of trades. Because they put the wrong. They're short puts, and they got to scramble to cover them and buy them. That might add to it, but. Man, I don't know. I'll have to read the article before I come down too hard on this guy.
Fair enough. And then if I could just put a bow on what I was saying earlier, to everyone who's been waiting for a big flush, you got it. Okay, I want to hear from you now, right? Well, what are you doing? Because it just goes to show. Because buying now seems insane, right? It seems ridiculous, but that's the idea, right? That's the idea.
For you, Spencer, it's not.
Right. Yes.
Okay.
You're right. But I guess I'm speaking more broadly here. Everyone who's calling, waiting for that next big crash. Well, you got like the worst day in the history of the Dow in terms of points, which I know is not a great barometer. We prefer percentages, but still pretty bad day, or pretty bad several days here. You got a big flush. Now what are you going to do? Are you going to, you think you can time it? See, that's the point. If you're someone who's waiting for, a big market crash, you think you're good enough to time the bottom? Good luck with that, because who can say how far we can go? To your point earlier, Joel, we have gone so high for so long that it's impossible to say when we're going to bottom, right? It's impossible to say how long the rebound could take. So everyone who's waiting for the crash, you got it. Good luck calling.
I don't think this is a crash. I don't think we've crashed yet.
Okay, right.
I think maybe when we hit we haven't even hit a limit down yet.
Okay, right. You're right.
Yeah, that's crashing.
That's a great
when
point.
You hit limit down, when we're down 7% in one day, that's a crash.
That's a great point.
Yep. And Johnny Zoo, he wants to hear from Triple D. Triple D is enjoying himself. He'll be back on Monday. You know what? I could be here on Monday and probably not talk the entire show because he is going to talk. But he just give you his perspective. I mean, I talked to him for quite a bit last night, and he doesn't have a shopping list out to buy stuff yet.
Right.
And he wish he would have sold more, and he wished that he had more puts. So that's his perspective.
Well, of course he does now.
Everyone
does now. Okay, let's get into some earnings here. At 8:17, we haven't. I said at the top we try to cover as many stocks as we can, so let me try to stick to that here. Let me do Square. They reported after the close yesterday, 23 cents versus 21 cents, sales of 620 versus $593 million. So a beat and a beat for Square.
And you know what? The characteristics of this stock is like it seems to always give you another chance. It seems like on the upside, like it hit 85. Not that I've ever bought it on these dips, but it just seems like it always gives you another chance. And it hit. We had a nice high of the move over at $86. Bad day yesterday, and they rallied it back up. Your after hours high was made at 83, right on the kisser. You're holding it 80.11, and that's still up a couple bucks, right? It's still up 360. So I don't like that it's off the pre-market high, number one. So I think you're going to have to pick an intermediate term level if you want to get out in this. I don't know if you're going to see that 83 because a lot of people like, oh, I should have sold at 85, 86. Oh, no, I can't believe it's at 79. Oh, no, it's back up at 82. No, it's not even at 82. It's at 80.28. So just the three lows on the bottom, I can tell you where support is more than resistance. And as long as we hold 76, there's a trio of lows, 76.07, 75.79, 76 even. As long as we hold 76, I'll call this an uptrend here. But that's a big level. Tough to pick a resistance point on the upside.
He also gave guidance that was in line with estimates, and quite frankly, at least they gave guidance. I'm waiting for companies to just pull their guidance entirely, but that hasn't happened yet. So Square's guidance was fine. Let's go retail here. Let's go to Best Buy. They reported earnings this morning, just about an hour, a little over an hour ago now. Q4 adjusted EP. What?
I was just saying, hanging in there.
Yeah, Q4 adjusted EPS of $2.90 versus a $2.75 estimate. Sales also beat 15.19 versus $15.06 billion. So beats in the fourth quarter for Best Buy. They're also raising their quarterly dividend from 50 cents to 55 cents a share. And they gave some guidance as far as enterprise sales are concerned that were in line with estimates.
I just don't like the reaction here. Small pop was faded.
It's a tough week to report, Joel.
Yeah, I put that actually in one of my articles before. 81.67 was your low from yesterday. You're through yesterday's low, so you at least want to get through yesterday's low in the close. I'll play this one a little closer to belt, and I will say unchanged is resistance at 82.18. Now you're losing this 81.67, 82 level. I mean, this kind of just depends on how the market goes, but don't see anything at 80. Really don't see anything at 79, but just below 79, 78.89. December 5th low, 78.30, the 4th low. So this call, if it gets jammed and slammed, 78.50 might be a good target on the downside. We are drifting towards the lows of the pre-market session here, folks. Current low is 59.50, down 47 and a half handles.
Was that overall, or was that best price?
That's from the close.
Okay.
We're down 47 in it. So what's that? 400 or 500 points in the Dow. So gonna be a tough open here, folks.
Yeah. Let's just keep on the earnings parade, and then we would love to get to some tickers from the chat. I just want to get to a couple more. Etsy reported after the close yesterday. Shares are up. Last I checked, about 8%. They beat on their EPS, beat on their sales, and their guidance for the year was actually above estimates. So Etsy with a good report.
Etsy off the highs of the pre-market after hours session. I mean, a lot of times you get those good reports and you see those pops, 57.77. You've hit that back at 55.26. Boy, oh boy. I think you're going to have to pick another level, folks, besides that 57.77 area, because it just seems to be leaking here. On the downside here, you got a gap to fill all the way down to 52.65. So if you're buying this thing, probably won't give it all back, but if you're looking for a gap fill, 52.65 is where the top of yesterday's range comes in.
Did we do L brands yet? No, I don't think we did. Let's just do L brands quickly here. Their EPS $1.88 versus $1.83, sales 4.7 versus $4.66 billion. We know they are offloading a majority stake in Victoria's Secret. That was announced a week or two ago. But here is the pre-market chart in L brands. They don't like the report.
Boom, boom, boom. At the lows of the pre-market session, I own this dog. I wish I would have sold it on that news what they were selling Victoria's Secret. Once again, you had a gap to fill when everyone thought they were going to get $6 billion, and I think they got $3 billion for it. So you got a gap fill here at 20.77. So if you're waiting for that gap fill, boom, there it is. You probably get it today. If we just keep going south, not seeing much in the 20 handle, let's call it 20. Let's see, that's 816. Let's call it 2812 or 2816, 2815 or 20.15 to make it easy. That splits a pair of lows from the 27th and 28th of January.
All right, and then the last two earnings stocks that I really want to get to are Marriott and Booking Holding. So I'll do them both together here. BKNG reported after the close yesterday, EPS, $23.20 per share versus a $22 estimate. So they beat that already high number. They need to do a stock split or something. Sales, 3.3 versus $3.28 billion. Booking says that their Q1 room nights booked is down 5 to 10% on a year-over-year basis. That's hardly a surprise. Total gross travel bookings down 10 to 15%. So again, not a surprise. Marriott reported also after the close their earnings per share beat. Their sales miss, and they gave guidance, but it does not reflect the impact of the virus. So I don't know how you can take it seriously. Let's look at BKNG and MAR.
BKNG, I mean, if you talk about a stock that's in the crosshairs of the coronavirus, you got two of them right here. So if you're thinking of buying the dip, I'm not even going to give levels on these two.
Yeah.
If you're thinking of buying the dip in either of these stocks, take a look, pull up Carnival Cruise Lines and Royal Caribbean and Norwegian, and then think about what you want to do and make a plan. Because like you say, like this is just now. This is just this quarter. What
Right.
about next quarter? What about the third quarter? I mean, I can't say that Q2, we could throw it out the window here that it's going to be bad earnings, but boy, even if they bring down expectations, it's going to be hard to meet lower expectations. So I've never owned either of these stocks, and I don't plan on owning them soon.
Right, and that's the thing. Like let's pretend that the virus is gone in like a few weeks. Okay,
Yep.
it's not just a question of getting back to business. It depends on the customers. It depends on people wanting and not being afraid of traveling, which who knows how long that could linger, right? So
I ain't leaving my house. What are you thinking about traveling? Nah, I'm just joking.
right.
I might go to Costco today and get some stuff.
Okay, good luck. Yeah, actually, maybe we should have looked at Costco a few weeks ago to see what Let's pull up that Costco chart, see what they're doing.
All right. Yeah, it's tough because
Yeah.
they're a retailer. But boom.
No, but to your point, the cruise lines and the airlines should probably be your barometers for if you want to buy anything, just look at those and what use them as a frame of reference. Because I mean, CCL, right, crushed, obviously, RCL, same story. They're all gotten hammered equally.
Well,
Um,
not to like throw fuel on a fire here, but if what's going to happen the longer this goes on, what like companies that are businesses slowing down, what are they going to do? What's the first thing they're going to do to help the bottom line?
lay people off.
Yes.
And now you're starting to talk. Now you're implying like an economic snowball.
Yes.
Okay.
And because the Fed was, used some of the bullets in their chamber when they really shouldn't have, and they cut rates before, they have less ammunition here. So I'm just looking at the possible long-term effects, folks. They're not, and nothing is written in stone. That's for sure.
CME FedWatch tool is basically pricing in a 50% chance of a rate cut when they meet.
How much lower can we go?
We can go a lot lower. We can go to less
negative.
Well, okay, technically that's possible.
I still don't understand that.
Me neither. So there's a meeting on March 18th. Market's pricing about a 50% chance of a rate cut at that meeting, so that'll be a big one for sure. So to keep on the calendar, March 18th for the Fed. Where else did I want to go here? I guess I wanted to also look at some of these quote unquote coronavirus stocks.
Sure.
Like APT, which just has not stopped. Can't stop, won't stop. There's nothing you can say about it because this is just such a unpredictable thing. But Brandon, what did you say that they had received like 14 million orders? Right, 14 million orders in the last month, and they can't fulfill all those orders. So and remember, this is a company that they make face masks, right? They have received 14 million orders in the quarter, and they can only fulfill about $4 million worth of those orders right now. So face masks are flying off the shelves. I'll pull up the chart of APT. There's nothing you can really say about it beyond the fact that the trend is your friend.
yeah. If you own it and you have a target, then take it. That's what I'd have to say. I don't know if there's a liquid options market associated with this. This is an Amex stock. Looking at the trading at the highs of the pre-market session, that's 1960, I believe. We just hit that on the last bracket. So, whoa. Yeah, that's it's only up 50% here. Yeah, 1960. So there you go. There's a target on the upside. You might want to see what the target is at 9 or 929 and 59 seconds and use that. Increasing volume has come into this. I don't know what the short interest is in it either. As much as I love the short stuff, I'm not shorting this one.
Yeah, I get the sense it's not high. 16%, which is not
Okay.
not outrageous.
The volume's still going up, man. 1, 2 million, 3 million, 10 million, 20 million, 25 million yesterday. So the volume is coming in. So at least wait for a double top or a double bottom or some kind of consolidation or something like that. But as Triple D would say, this one's above my pay grade. Anybody that's longing, congratulations. If you have some kind of target, take it. Take half off. Very hard. Very difficult stock to trade. Am I trying to buy it on the open today or any place today? No.
Right, and it comes back to knowing what's in your wheelhouse. This is not in your wheelhouse, so you wouldn't buy it.
Yeah. Yes.
We just got GDP. It was in line. Jobless claims, a lot of data today. Jobless claims a little higher than estimates. Durable goods higher than estimate as well. I'll be watching that GDP number. That'll be interesting to keep an eye on here as we
move forward.
Move forward.
Yeah. I mean, this is good. This is good. This is today's numbers, right?
Yeah, this is today's. Yeah, right. Exactly. So, all right. I do want to get to some tickers from the chat. I've been trying to do better at keeping one eye on both chats throughout the show. Somebody asked about, or someone just dropped in the pre-market chat, Roku. I'll just pull the chart up of Roku right now. None of these moves are fundamental, obviously, so there's nothing you can really say about it besides the movement with the market. But we'll look at the chart nonetheless, and Joel can help us find some levels potentially.
Well, we're trading down at 106.20. What was your 2-day? We're below your 3-day low. Just go to the monthlies on this one.
Sure.
And I don't know. I mean, if I wanted to own this, over the next 2-3 weeks or month or whatever, I'd try and hold out for $100. Or if I was short, I would try and hold out for $100. I mean, I see one daily low at I see a pair of daily lows at let's just call it 104.40. So if you want to use that, and then it's 101.55, and then the magic $100 number, two lows there, 99.98, 100.40, and that. So I stand corrected. The actual low of the move was 98.08.
And someone asking about Anaplan, PLAN. They had earnings this morning. I'll give you the numbers right now. Earnings per share, 7-cent loss versus a 1-cent loss estimate, so they lost more than expected. Sales $98 million versus $97 million. Q1 sales guidance was higher. Actually, it was in line. They raised their sales guidance for the fiscal year, and again, not a good week to report, but they're reporting wider losses than expected. So that'll do it.
Anaplan?
Yep.
What the hell do they do, Spencer?
Pretty sure they're semis.
Okay. Boom. Man, tough chart with Thursday here.
It's cloud. Sorry.
Okay. Low of the pre-market, 43.21. And you got a daily low that coincides with that area, right? Nope. Well, yeah, you do. Folks, go back to October and look at this area, the 18th through the 23rd. And you have lows at 187, 375, 298, and 292. So you split all those areas up, and that makes it, let's just call it 43. And we are trading right there. We're trading just above that. So I kind of like the 43 support level. Pre-market low is 42.80. It's kind of confirming that. See what happens at 43. No guarantees. Maybe if it dices through 43 and then comes back up over 43, but it's kind of my number of the day here for a stock that I know very little about. For you longer term investors that think, oh, this is just, another buy the dip opportunity. This stock IPO'd not too long ago. The low of the IPO was 2037. So you got a lot of people still sitting on a lot of profits in this one. So if you think 43 is cheap, some people may think it's expensive and look to sell at that level.
Go for the W. Just brought up a stock I haven't looked at for a couple of days. Alibaba. Wow.
The Bobster. Yeah, that's a good sign. I mean, if you
look at that.
Yep.
It's holding up.
Yep. It's holding up very well. So it's either, showing extremely, relative strength and it's good. And then when the market turns around, this one's going to rip, or it's just hanging on and it's giving you a chance to, sell it. I think long-term investors here, as long as it stays above 200, 199.50 was a low on January 27th. So I think out of everything I've seen, that chart is the most positive thing that I've seen.
That's really good. Yeah.
In the markets on a relative strength basis.
And that makes you want to look at Baidu too. And I'm pretty sure, doesn't Baidu report earnings here shortly? Let me look.
Baidu looks, Baidu.
Yeah, Baidu reports after the close today. So keep that in mind.
Baidu is no Baba. That's all I have to say. This one already's been killed from 280 to $100. So not as impressed with this one as I am with the Alibaba chart.
All right, I want to bring on our guest right now, Gordon Johnson. He is the founder of GLJ Research. Gordon, good morning.
Hey guys, how's it going?
Doing well, Gordon. So we spoke to another analyst last week, and we asked him, broadly speaking, are you having conversations with your clients about coronavirus? He said not really. Wasn't a huge concern among his clients. That was last week. What about you? Are you having these types of conversations with clients about the impact of coronavirus?
We've done 2 calls with a China economist who I very much respect, Victor Shi. We started doing those calls in mid-January. We are having those discussions. We think the impact is going to be much worse than feared. Keep in mind, with the SARS outbreak, when you didn't have a market at all-time highs, the S&P was down 16% on the SARS outbreak. Clearly, that was maintained primarily to China. It wasn't a pandemic, and only 8,000 people died. Corona's already worse than that. So, I think that there's significant more downside. China, in 2002 with the SARS outbreak, China was 4.3% of GDP, global GDP. It's closer to, 16% now, or I'm sorry, 20% now. So, the impact to pretty much everybody is going to be profound, and we think the market is still grossly underestimating that. So to answer your question, sorry, we are having those discussions.
That was my next question is what is your assessment of how the market is factoring in any impacts?
Listen, we've been in a 10-year essentially bull market, the last year of which was a bull market on steroids. And when you look at the expansion of the Fed's balance sheet in the U.S., but more importantly, the expansion of balance sheets everywhere, China, Japan, et cetera, there is a predisposed notion by investors that stocks just don't go down, and if they go down, that's an opportunity. And people have just been predisposed to believe that over the past decade. There really hasn't been much volatility in the market, and that's not normally how markets work. Typically, there's price discovery. There hasn't been any recently, but we think this may force that, because the problem is, and this is going to be my attempt at a bad joke. You can't throw money at the flu. So the point is, like, China's stimulating, right? They're printing a lot of money right now. They're paying people to come back to work, but you can't pay somebody to put their life at risk. So when people aren't going to work, right, they're not buying stuff and they're not making money, which means even when they do go back to work, they're going to buy less. So the reverberations are going to be profound, and I think much longer than the market realizes. Think about this, right? Right now, if you look at I think it's the Johns Hopkins data, it's saying there's only three incidents.
We're looking at that. Yep.
Yeah, they're saying there's only 3 incidents of coronavirus in the Philippines. But just 2 days ago, the Philippines announced that they're delaying a 135 megawatt solar project because of the coronavirus. It takes a 135 megawatt solar project is probably the size of 3 Central Parks, right? Full of solar panels. So you're talking about hundreds of people over an extended period of time. The official data says there's only 3 people there that have it. Yet they've decided they're going to cancel a solar project. So this thing is psychologically, I think, much more robust than what people expect. And, politicians want to keep stock markets high. So they're, hey, there's, the death rate is this, the mortality rate is this. But there's the second derivative effect of what it means for people, right? If it breaks out in New York, you think I'm going to keep coming into my office? No, I'm probably going to work from home or, go to Ohio where I'm from and try to hide out. It's going to affect my spending patterns. But, I think that's what people are kind of overlooking.
You're not from Columbus, are you?
Oh, geez.
I am from Columbus.
Oh, God. Okay. Spencer, you can do the rest of the interview.
No, but
Big Ohio State fan.
That brings up a point that we were talking about earlier, which is that psychological impact on business, on companies, where it's not just a matter of going back to opening your factories up and making your stuff again. It's a matter of customers willing to buy your product and go out and participate in the economy. So I'm glad you brought that up, and I'm glad you brought up the solar project in the Philippines, because I want to ask you, in what ways are you seeing the companies in your coverage? You cover steel, you cover solar, you cover Tesla and Aurora Cannabis. In what ways are you seeing those companies have their businesses disrupted?
Yes, I mean, we could start with, I guess, the most popular of them all, Tesla. So if you look at Tesla, Bloomberg has an article out this morning that states that their China sales are down 46% month over month. That's in January. And keep in mind, that's not the full effect of Corona, right? The coronavirus didn't really break out until mid-January. And already in February, people are talking about through the third week of February, sales are down like in the high or low 90% month over month. So when you look at Tesla, and this applies to a lot of companies, Tesla has a lot of debt, right? And it's a company that has been public for, over a decade, has gotten billions of dollars of taxpayer incentives, but has never made money, right? They lose money. So we're in this environment where, a lot of investors are putting money into companies that are perpetual loss makers. And that's fine when the credit markets are flowing. But do you think banks are going to be chomping at the bit to lend Tesla or any auto company money right now, given the outlook? Like, banks aren't in the business to lose money, right? So if the credit markets dry up, I think you're going to have a severe effect on a lot of these kind of what I think of as unicorn stocks, where they don't make money, but there's this perpetual growth narrative. And with respect to Tesla specifically, I mean, if you look at the data, right, this is a company that, is valued at nearly double the market cap, $143 billion of Volkswagen. Volkswagen's market cap is $82 billion. Yet, Volkswagen sells 10.5 million cars a year. Last year, Tesla sold 365,000 cars. Tesla's guiding to 500,000 cars sold this year. Tesla trades at more than double the value of GM. GM makes 500,000 cars in 3 weeks. My point is, for Tesla to get to fundamentally where it's being valued at, there has to be tremendous growth in their sales, right? But if you look at the second half of 19, their total revenue was down versus the second half of 18. If you look at the fourth quarter of 19, the revenue was down over 30% versus the fourth quarter of 18. The point is, their revenue is already declining, yet it's being valued as if it's going to have tremendous growth. You look at quarter to date, you look at the Netherlands, Norway, Spain, which was over 50% of their EU sales in the fourth quarter of 19. Those 3 countries, quarter over quarter, the revenue is down like 98%. Month over month, and year over year, the revenue is down like 60%. The point is, I think they're going to have, and so the problem for Tesla specifically is they're supposed to have unlimited demand in the U.S., the EU, and all over the world. So theoretically, if China's weak, they should be able to just divert 100% of their production capacity to the EU and the U.S. based on what the company's valued at. I'm just looking at the valuation. So as it becomes clear that they can't do that, as it becomes clear when they have to put out their production numbers that U.S. sales are down a lot and EU sales are down a lot and China's at a standstill, as it becomes clear that all this new competition in Europe is ramping, and in fact, the new competition cars in Europe are selling more cars than Tesla, I think a lot of steam is going to come out of that stock, a lot of steam. Think about this, right? Elon Musk said he was going to be doing 1,000 solar roofs a week by the end of 2019. I don't even think they're doing more than like 5 or 6 solar roofs a week based on the data we're looking at. And then you look at what happened yesterday, right? Keep in mind, last year when Tesla unveiled the Model Y, I think it was, I would argue, a disappointment, right? It was supposed to be a 7-seater, and they did that when they were in the throes of the stock coming down, people questioning the story. We just found out yesterday the 7-seater is not even available. They're calling people who reserved for the 7-seater and asking them to take a 5-seater. The Model Y is made with 75% of the same parts as the Model 3. So you're asking people who just brought a 5-seater Model 3 to buy a 5-seater Model Y with 75% of the same parts. You guys understand why that could be a problem. So I think Tesla has big problems this year. We've been saying that all along. I think a lot of the media coverage and the analysts / investment managers that talk about Tesla on TV, they spout these like long-term, like aspirational metrics. But keep in mind, this isn't a new company. This company's been around 10 years. They lose money every year. I think Q1 is going to be a disaster. I think this year is a disaster for them. And if we move to solar, right, you look at what's happening in solar. Yesterday, prices came out. So every Wednesday, prices update, PV Insights and Energy Trend. And if you look at mono PERC module prices, global, they were down 4.5% week over week. That's a massive decline, right? So there's two frames of thought. One is prices go up because China supplies a lot of the world's modules. Another train of thought is prices go down because you're not. So the reason why prices would go up is because China's probably 60% of the world's modules, 40% outside of China. So if you can't get those modules, prices should go up. But here's the problem. You have a lot of megawatts outside of China. And if you look at places like India, right? India just announced force majeure, so guys are able to keep their incentives even if they miss their targets. You look at places like Italy, et cetera. The point is, demand is going to be affected by this coronavirus. So you still have a lot of capacity outside of China that's still producing, i.e., supply, but demand is being affected, right? People don't want to go to work. So we're actually seeing prices fall right now, and I don't think that's consensus.
So wait, one thing I want to back up here on Tesla, they did make money last quarter, and they showed they can turn a profit. They showed they can deliver cars, like they said, and turn a profit. So those are sort of the two.
No, you're wrong. You're wrong. They did not make money. So I'm looking at GAAP net income. For the year, GAAP net income for the year was almost negative 900, almost negative 900 million. And keep in mind, their free cash flow, right? Their CapEx was down significantly versus 2018, yet they're building a factory in China and Germany. They capitalize a lot of their CapEx, meaning you don't see it on the cash flow statement. So, you know, with Tesla, you can't just look at the numbers they report. You have to actually look in detail. In fact, I think the SEC has opened up an investigation into their classification of CapEx. It's been speculated associated with the China plant. So, Tesla lost on the net income line. Tesla lost nearly $900 million last year. So to say they're making money, that's not the case.
Okay. In light of all those facts, you can't ignore the move the stock has made. So what
but see, that's the problem. That's the problem, right? Everybody's just, the stock's going up, so it's good. So the stock's going up, so it's good. Look, I agree. The stock is completely detached from reality, right? But you can't ignore the facts, right? Everybody keeps saying, in light of those facts, the stock. In light of those facts, the stock. That's how you get in trouble, right? Because this is supposed to be a hyper-growth company, right? And that's why people are buying the stock. Look, I'm wrong on the stock right now, but if you look at the fundamentals, the revenue decline is accelerating. And the proclamations that Elon Musk has made, right? We can go all the way back to when they started taking deposits on the Tesla Semi over 800 days ago, right? They started taking deposits on the 7-seater Model Y last year. They started taking deposits on the Roadster, I think, roughly 800 days ago. These are products that aren't available. The NTSB just came out the other day and said, you guys are not taking our recommendations on safety, and your what you call full self-drive is not full self-drive. It's level level 2 and you need to make changes and you haven't made the changes. You're one of the only 6 car companies that haven't made the changes to your auto assist drive that we stated. My point is you have to look at all these facts, because if you don't look at the facts, when the stock starts to tumble, you're going to question and ask yourself why.
All right, and that's a great point. You know, the people today are right. The people, just because you're right today doesn't mean you could be right tomorrow. Joel, I think you wanted to jump in and say something.
Yeah, Gordon, thanks for coming on. I mean,
Yep.
as anybody, a veteran in the markets, sometimes you're right, sometimes you're wrong. Standing
Right.
up when you're wrong is you got to do, and you see things in your P&L and you see things. So I appreciate your candidness. Let's just throw out all right, all the we can't throw out all the negatives and all the unknowns here.
Right.
Just go into the whole global situation here.
Mhm.
What would turn, what would turn you? Like, what would say, for me, once I know that there's, we're being properly tested.
It's very easy. 4 consecutive quarters of net income, positive GAAP net income.
No, I'm not talking
right?
about Tesla. I'm not talking about
Okay.
Tesla. Yeah, I'm just talking
Okay.
about the overall economy in the world. That's what just everything that's going
Right.
on.
I'm sure you guys just saw U.S. durable goods just came out horrible. Look, we're not. I'm not. It's hard to make a call on the global economy. We make
Yes.
calls on specific stocks, right? And
Okay.
and everybody positions us as bears because we have a lot of sell ratings. But we would love to find longs. In fact, we think we found a couple. Can't talk about those yet. But with respect to the specific stocks, I mean, what would turn us is if fundamentals turn. Like, we cover the steel stocks, right? We're very negative, U.S. steel. The reason is because their cost structure is above everyone else, and there's a lot of capacity that's being ramped in the U.S. to appease Donald Trump. We think that's inefficient. If you look at the last time there was basically protectionism with the Bush administration, initially it worked, and then it was a disaster because when there's protectionism, the steel mills have to give the government a gift as well, which is irrational capacity. And you're now seeing the effects of that. If you look at, Cleveland Cliffs, everybody talks about the protectionism, but they have a structural problem. The problem is their product is priced on the Atlantic pellet premium. The Atlantic pellet premium is dictated by European steelmakers. China can't dump in the U.S., so what are they doing? They're dumping in Europe. So European prices are being affected by China's dumping. So that's having a direct effect on Cleveland Cliffs. People haven't put connected those two dots. With respect to the solar industry, you have Tongwei is ramping like 90 gigawatts of capacity. The entire global market's like 114. That's one player that can nearly supply the entire market. You're talking about massive oversupply. So what would change me? I mean, it depends on which specific stock you're talking about.
Okay.
It's not like we're negative the world, right? There's pockets of strength and there's areas, but we really focus specifically on the stocks. But we do have an industry backdrop, which I think is important for each sector.
I saw durable goods as being better than expected for the month, so maybe we saw two different readings or different measurements.
I was just reading a market headline. Let's see here. Let me pull it up.
It was 0.1%. It's not. Gordon, I anxiously await your bullish recommendations. We know you have very convicted bear calls. Very curious to see what you're coming out with the next few weeks. Gordon Johnson is the founder of GLJ Research. Gordon, thank you so much, really, for the time today. We appreciate it.
Yeah, just real quick on durable goods. I'm sorry, the headline was, they were positive 2.4, now they're negative 0.2, so they're back in negative territory. Better than expectations, but I guess the point was that's pre-corona, so we'll see what happens.
Okay, yeah, we will. Gordon, have a great one.
All right, take care.
All right. Wow, that was a hurricane.
Spencer, I think everyone,
to keep up with him.
I think everyone in the pre-market prep chat and the YouTube chat should give Spencer a big hand. I'm so happy the way you handled that interview. I might cry.
Thanks, Joe.
You did incredible. You really did, man. That was a tough interview.
He's a hard one. He's hard. He's challenging.
He is. He challenged you.
He has a lot of facts in his head. He knows a lot of things fundamentally that I don't, that most people don't. So it's very hard to interview him, and because he's very knowledgeable and he is very convicted. So
I mean, I think I'll just have to tell Dennis that, he's no longer needed on the show, that it's going to be the
right, right.
Spencer and Joel show. And,
I
you know, so people
appreciate
are
it.
saying he
Appreciate it.
practiced with Dennis here.
Appreciate it.
Trained by Dennis. That's right.
Yeah,
Good job.
appreciate it. Yeah.
All right. Anything in ratings land?
Nah, yeah. I mean, it's hard. How can you, if you're an analyst, how can you come out and say anything in this market? Stone Co. is getting upgraded. JP Morgan this morning to overweight. JP Morgan is also upgrading Logitech to overweight. Those are kind of the two big ones that I saw. Not really much in the way of downgrades. It's all either earnings reactions or if you're an analyst, you just sit on the sideline and you kind of wait for this coronavirus thing to play out, however long that takes. I can't imagine we'll see too many big ratings changes in the next couple of weeks until the market really calms down.
What was the upgrade you gave me?
Two upgrades: StoneCo, STNE, and LOGI were the two that really jumped out to me. JP Morgan.
Not reacting much on this StoneCo. So not getting much of a lift off that.
And then LOGI was the other one.
Yeah, better hold 40.
Yep.
42.19 is yesterday's high. Doesn't seem to be moving that much.
And then Virgin Galactic, this has followed through from earnings yesterday. They're getting downgraded by two firms, Morgan Stanley and Credit Suisse, but it's just a neutral on both those ratings. So
I will reserve my comments on Virgin Galactic since I have a position.
Oh, all right. Good for you, Joel.
How do you know what it is?
I don't know what it is. I have no idea what it is.
Okay.
Good for you nonetheless. All right. Let's get to a couple more from the chat. Let's look at Gilead here. We talked about this a couple of days ago when they had a headline on their vaccine a few days ago. They may have had another headline yesterday as well. But they're widening.
Yeah,
They're widening the testing of their drug in Hong Kong, South Korea, and other Asian markets. That's this morning's headline. Let's look at Gilead.
Yeah, boy, oh boy. I mean, this is a tough one. This is a tough one because it's giving you a look, and then it peels back, and then it gives you another look, and now it's up again. So I don't know. You just got to wait to see how this progresses.
Yeah.
Right now, pre-market high is way up here at 80, 81.35. You've kind of faded off that too. And $80. I did an article about this the other day. 80 has been a tough level. You had a high, just nothing there. It just seems to me like be a psychological level. It is at top of the trading range.
What about, as I go through the chat here, let's look at Regeneron.
Regeneron.
Same story.
Regeneron here. Whew, up another $17. Holy
this one is not coronavirus.
What is it related to?
Related, but there was a headline a few days ago about a drug of theirs or a rival drug that didn't
it didn't do well?
Yeah, didn't do well. So
man, it's on its way back. I mean, 500, a psychological level. Let's see. You had an all-time high. Let's just call it 560. You went to 240. So 460. Man, I'm having trouble doing the math. 220-point move, 110. So that you're through the 50%. I don't know. That's a tough one. I'd just say psychological level at 500, a massive 3 days, maybe wait for the volume to calm down a little bit. Big volume's been coming in, so there's still an appetite to buy it. Looking at 500 is just a psychological support level or resistance level.
And then before we wrap, I just want to pull up Microsoft and the chart of the SPY again and just get your thoughts as we've gotten a little bit closer to the open here.
Microsoft, it looks like it held 163, and we talked about there was a few daily lows in there. So Microsoft is finding some support at 1 63 actually dipped below that pre-market low, dipped by it quite a bit, 162.20. So if you're looking for an area here on the downside, I still like the 163 pre-market low, 162.20. We're here down at the lows of the pre-market session. So, let's see if 59.50 holds. If you break below 59.50 and then rally back above it, maybe get a chance, somewhere, I don't know even know if you're going to get back to mid-range on the session. But that's it. On my sheet in front of me, my next daily support level is your November 1st low at 30.35.75. So that's about 30 handles away.
Okay, I think that'll do it for our show. I tried to get to as many tickers in the chats as I could. We'll do more tomorrow. If you missed any part of the show, you can always catch the podcast of it on whatever podcast platform you like, or rewatch our show on youtube.com/Benzinga TV. Thanks to our guest, Gordon Johnson. Thanks to all of you in our chat, both of them, the one on YouTube and the one on premarket.benzinga.com. You can always email us, premarket@benzinga.com, or give us a call, leave us a voicemail, 734-494-0246. Please remember, all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Everyone, have a great rest of your day. We'll be back with you